right, guys, we're gonna open up for Q&A. So if you want to mute yourself to ask Sam any questions you want, go ahead and raise your hand digitally, or you can even ask in the chat as well, and I'll read it out to Sam as well. Okay, give you guys a couple seconds to do that. So, yeah, in the meantime, Sam, I know that the real estate market is down right now, and obviously you're going into this paving and business acquisitions. Do you foresee that is part of your strategy in doing that is to ride out this real estate market and have diversifications so that way you can still get cash flow, you can still chance like a good chance of having successful investments. Yeah, share
Sure.
with us a
So
bit about
yeah,
that.
totally fair question. Yeah, I'd say I'm looking at things I can be much more involved in than the level of involvement I had in real estate deals, right? Where
Ah,
for me, like I want to do less overall volume and go much deeper with those key partners. So I'm still involved in real estate to go keep my tax status, right? As for RAP status for tax purposes. So I
mhm.
still keep principal loans in multifamily to get exposure. It's just my investors haven't had appetite in that asset class. And for me, it has been worth it to go do the lift to go get the marginal dollars I can get there. So what I'd say is I still love mobile home parks. Like I still love them. There's just not enough deal flow there. If bonus comes back in full, I have a lot of money earmarked for mobile home parks to go defer taxes in the future. But I'd say is like I would rather just go invest with people that I know and trust in real estate rather than doing my own deals there. Like I'll still always invest with Rob Beardsley, Red's like one of my closest friends. But I'd say it's finding things that I have an actual advantage in. I have no advantage in real estate. I'm just going to see that changing. So I'll likely just go invest in people that I know and like in that space too in the future versus trying to go do it myself.
I see. Very good. Jeff, go ahead, unmute.
Hey Sam, Jeff Cassell, how you doing today?
Hey Jeff,
Um,
what's going on?
what out? What is your process when you're going after to find businesses that you like? What I mean by that, are you actively going after on LinkedIn for paving companies or automobile restoration companies or tuning and
So
loom?
what I would tell you is it depends, right? In the paving side of the house, we're only focused on paving. So we have a team work with brokers. We work on like off-market campaigns to sellers directly. And now we're getting more referrals, being known in this space too. The nice thing is that in the paving sector, like we want to go big and there's very few groups that are going big already. Like we'll be a top 10 buyer in paving by the end of this year already throughout the US. So what it does, it
Mm,
allows us to go differentiate ourselves. Like we're also called the pave. So it does differentiate yourself by just buying paving companies. On this stuff, I invest in more so personally. I actually get a lot of good deal flow from the accounting firm that I own, right? In terms of people typically go to their accountant for growth capital, right? So for us, we saw a lot of good deal flow just from that. And that's more opportunistically, right? Where there's a company or two a year I'll go invest into. But yeah, I'd say really dialing into what it is you want to go solve for when buying a company. Do you want to go do a roll up? Do you want to use it for cash flow? Because they're very different transactions, in my opinion. Like a roll up, you need to have big level of scale. You have to plan on going to sell it. Like the things that I buy myself or invest in myself are things that we would never go sell. Unless someone makes you an offer that you're foolish to go turn down, the intention is things that we would go buy that we hang on to for the foreseeable future.
So, like, in what states are you focusing on your paving businesses?
Right now in the Southwest, so we have companies in Texas, Phoenix, and Utah. Or sorry, Texas, Arizona, and Utah. And we're looking potentially expanding to Florida with a platform company there.
Fantastic. And do you have a criteria that you look for, a certain size?
The smallest I'm really look at is about $1 million of EBITDA, but preferably three or four plus.
Okay, fantastic.
Platform companies more 8 to 10 plus.
Yeah.
very good. Thank you, Jeff. All right, so Ali has a question in the chat here. Can you expand just a bit on the fund of funds with Tribevest? Is that for your debt fund?
Yeah, so Tribevest, if you're not familiar with them, they're great. They do all of the back office work for fund managers. So, for example, as an operator in the paving space and the income fund that we run, all of our fund managers get their legal docs and their back office support from Tribevest. In turn, right, if Tim is a fund manager for us, right, Tim does his docs kind of like a mini PPM off our PPM with Tribevest, right, a fixed flat rate fee. They collect all the capital for us, and then Tim sends us $2 million from his 20 investors at 100K. They handle the back office, they handle the K1s, they handle the accounting, right? It basically just allows us to have Tim as our big investor versus having 20 of Tim's people, and they make sure that Tim can go get paid compliantly for the work he's doing.
Awesome.
So as an
Thank you.
operator, they're great to go pass off work too. It just gets it off your plate. We used to do it ourselves before internally, and it is a bear of a job to go do. So it costs you nothing as an operator and really allows for a good experience to get it off your plate too.
What is the minimum I need to raise if I get involved with Tribevest? Because when I spoke to them about Aspen, it was a $1 million minimum raise with Aspen. What's the minimum raise on your funds of funds for your income fund?
Yeah, so we put it at $1 million, but we'll take less than that. We'll honor your class of share at the $1 million class of share
Okay.
if you just go create your docs with them. The only thing I think about is that you let things be at least $250,000 so your fund to fund costs don't kill your deal.
Yep.
What is the time frame? So let's say, is there like a certain period of time where I need to raise the capital, or is it open-ended? How is the structure on capital coming in? What is there like
So
some type of time frame on this?
yeah, so on our end, it's evergreen, right, in
Okay.
structure. We're still finalizing things with Tribevest to how long they'll let the fund managers raise without additional cost. I'm just figuring that out now with Seth and team there. But yeah, our fund would be an evergreen fund that we look to go keep open.
Perfect, because with Aspen, they gave me like a 90-day window to raise the $1 million. And then they would say, if you spend another $1,000 in fees, they'll push it another month. But there was a tight window to raise the capital. With you being evergreen, there's a lot more flexibility for someone like myself to build up some traction.
It's also super helpful to have an offering that's always open, right? Where if you talk to an investor saying, hey, you know what, Joe, this investment based on what I know about you isn't for you, but we have this that's actually open right now that could make more sense. So I think having a debt option or income option that's always open is a really compelling offer relative to having kind of more equity driven options as well. So it allows you to go kind of position them against each other too. So you always have a deal to go talk about, and you always have something to go position against of saying, hey, you know what, this isn't for you, but this may be. This isn't for you, but this may be instead. So it gives you that optionality in terms of how you frame it.
Yeah, and once the investor starts to receive some consistent returns, there's always going to be the reinvestment option with them. So it's good to build up a good A with something like you're describing.
For sure. And you also will see success quickly. Like on my end, I always stay away from development just because it was too far of a runway to go see progress and traction, right? On this end, you can go show success within 45 days of getting distributions. And investors feel like that's a win, right? So it allows you as a fund manager to say, hey, you know what? This is working. Do you want to go double down? Do you have friends who this may make sense for, right? It allows you that kind of positioning for it too.
How long before you feel the Tribevest back end is ready to go where somebody can call the Tribevest and get started?
So on our end, we're still finishing up our legal, likely done here about 2 weeks. So our goal is to go launch it before July 4th.
Okay, perfect. All right, thank you for your time.
Yeah, of course.
Yeah. And Ali, I'll have my executive assistant Ramon, who's on this line, reach out to you as well. We have opportunities where we group up other fund managers. So if you're not able to raise the million, but maybe you're able to raise 250,000 or 500,000. We have other fund managers who are in similar situation that we can group you guys together, so that way collectively you can bring in 1 million, 2, 3, much higher amounts as well.
Okay, I look
Yeah,
forward to it. Thank you.
Yeah, Tim, that's a great strategy too, of having a handful of fund managers and work together on it just to go get into the deal itself too and make sure the deal cost doesn't kill you.
Yeah, for sure. That's the thing of being a fund manager that I learned, is that we do have to keep in mind of the expenses, because they do eat quite a bit into our profit margin.
For
Yeah.
sure.
Awesome. Vanessa, go ahead.
Oh, can you hear me okay?
Yep.
Yeah.
Okay, first and foremost, thank you so much for the wealth of knowledge you shared and for your time and everything. So hard to pick just one question, but for me personally, I think on the networking topic, since networking, like your network is your net worth, and you mentioned like the importance of relationships and so on, I am very anxious, like personally. So I would love to hear some advice from your perspective, especially because you mentioned that it's a very strong skill set you have, like ever since you were in sales with that background as well. So yeah, I would love to hear some advice from.
Yeah. So I think your network can be a few different directions, right? I think like being in places like this with Tim is awesome to go meet people in the industry, right? But I think it's also important to go network with people that could be investors for you in the future as well, right? Figuring out who it is that you want to go target, right? I think what Tim does is awesome. You learn a ton of stuff from here. You meet great people, but the likelihood of one of them giving you money for a deal you're doing, my guess is pretty low in the experience that I've had, just because they're all doing deals themselves too, right? They're saving their cash for their deals, their partnerships, etc. So this is great to go meet potential partners, to go meet potential people to go learn from. But if you're looking for investors, figuring out who that person is that you want to go raise capital from, partner with, and then figure out what the rooms that they're in. So on my end, for example, if I'm targeting people in the sales world, maybe it's going to a sales conference, getting on a sales podcast, right? Like figuring out where it is they consume content and where they interact, so I can go be in front of them in their natural setting and be the only private equity person in that room versus being one of 48 on this call right now. So figuring how you differentiate yourself in that way too. So I'd say stuff like this is awesome for one side of it. But the other side of it is also getting yourself in rooms that your target person is actually in, that you want to go bring into your business too.
Thank you so much.
BD, woohoo! BD's in the house.
Thanks, David. Great session, by the way. Thanks, Sam, for the insight here. My question is around your debt fund, and we're constantly looking. Do you guys originate your own deals, and how much experience you have in these deals? Or this is just like a big blood fund to allow you to invest in a whole lot of other assets? Or where do we find more information about your perspectives?
Yeah, so I can forward everything over. I'm still kind of finalizing our marketing material, but if you look at the intention around this, is that this is basically a broker who originates all of their own loans that they're previously brokered out to bring it on their own paper in-house. So they broker right now about $30 million of loans a month, and they want to go keep the top portion of those loans on their own paper. So they brokered out about $1 billion of loans in the 50 to 250 range in the last 11 years. Inc. 5,000 company, 100 employees, like a very solid group that the money's made in executing the paper on your own terms versus brokering it all out. So the intention is to be able to only go fund deals they source themselves in terms of businesses.
Understood. So these would be more like a bridge business loans effectively, right? Or it varies by the type of loan?
It's more so working capital, right? Most loans between 4 and 12 months.
This is for businesses, not real estate, BD.
Correct.
No, I understand. We've looked at about 3 different other type of business loans. Some of them would be like 2 or 3 days worth of credit to help, I guess, inventory for online sales. I'm just trying to understand. We're looking at a whole spectrum of debt products right now, and we're looking to kind of diversify within the business. I'm trying to understand where does this.
Yeah, this is more so average loan term of 9 months, but they'll range between 4 and 12 typically.
All right. I'm just curious, like whenever you're doing these loans for these businesses, it's based on their account receivable. So it's not, do you need them to have a certain amount of liquidity in their bank account or anything like that to get approved for your loans?
Yeah, so we verify liquidity. We also verify revenue in terms of, we more so look at how much money they have coming in each week or each month versus do they have enough in their account to go service it, right? Because we want to see is, okay, if we're factoring that we're getting 10% of the revenue the next year, we want to make sure that 10% of revenue is verified as to what that looks like.
Okay. The reason why I asked that question is because I met another gentleman that he does something very interesting. So let's say he has a client that is looking for a loan. So he and to get that loan, that client needs to have, I'm gonna make this number up, $100,000 in the bank account to get approved for one of your loan. He has a separate funds that lend that 100,000 for that client to be approved with that liquidity there, but he doesn't lend it unless your loan is approved. So yeah, he moves the money that way.
No, ours is a lot more simple than that too. Like for context, they've done over 60,000 loans in the last 11 years.
Wow.
Very, not all these moving parts to it, more so checking. Yeah.
Very
like
cool.
that kind of stuff I think can work like one off, but this is just like a much more scalable approach as they broker $30 million loans a month. They just want to bring some on their own paper.
Excellent. Awesome. I don't see any, let me see here. AJ asks, pardon if this is a repeat question. If you were starting today with no track record, how would you raise your first $1 million?
Yeah, so I would borrow someone else's track record, right? If you are new and you have someone who has a good track record, right? You're like, I'm going to go work with Tim on this deal because Tim's done a lot of deals. People know and trust him, right? I'm going to go work with Tim and go leverage Tim's track record. So Tim's done this many deals. These are the average return profile, right? You become basically a spokesperson for that main partner. So what I'd say is go borrow someone else's track record to go build your own. And for that first $1 million, $1 million you can do through a pure effort. $10 million is more so systems. $1 million, you can go grind that out, right? Of call every person, ask for referrals, go on LinkedIn, make a lift, right? But you can do your first $1 million through like pure grinding it out effort. Your next 10 become a lot more difficult to go do. That first $1 million, like you can go hit the phones and get that done. But I'd say borrow someone else's track record and be really dialed into as to who it is that you want to go raise capital from. And just go have many conversations as you possibly can with those people.
That's good. Good answer, Sam. Thank you. I don't see any other questions, so we're going to transition to the breakout session. How are you doing on your schedule? Are you available to join one of the breakout sessions?
I'm until 4:30 Eastern. So if another 15 on my end, that works.
Okay, perfect, perfect. All right, everyone, let's turn on your cameras. We're going to take a group picture with Sam real quick, and then we'll put you guys into your breakout sessions. I remove my spotlight. Alrighty. All right, guys, everybody turn on your cameras, all your beautiful faces. Remember, we have our upcoming events on October 2nd and 4th in Houston, Texas, our Capital and AI Summit. We always have amazing speakers that come, and our attendees caliber is really high. And so definitely make it there. We'll put the link in the chat for you. We have early bird special going on right now. You get 50% off. And it's a buy one, give one. And so it's, you can basically for as little as $500, you're able to get it for 2 people. Sign up the link there in the chat. All right. You guys all got your pretty faces on? Yes, makeup's on? All right, so Sam, we flex for our posts on our show. All right, you guys ready?
There we go.
There we go. Ready? 3, 2, 1. Yay.